Hey everyone, welcome back to the channel. And if you're new here, my name's Paula. On this channel, we talk about crypto, macro events, geopolitics, and the wider financial system. Because the truth is, you can't really understand what's happening in crypto unless you understand what's happening in the world around it. And right now, there's a conversation starting to appear across social media that I think is really interesting. Some analysts are beginning to ask the question, are we entering a bear market? You'll have seen headlines like the ones circulating this week saying Bitcoin could still fall much further, with some analysts pointing to a chart pattern that could take Bitcoin down towards the $51,000 level. And the argument behind that headline is based on a technical pattern known as a bear flag. Now, a bear flag is essentially a continuation pattern. Price drops sharply, the market pauses for a moment, and then, if the pattern resolves to the downside, the next leg of the move can continue lower. And if you look at the chart that's been circulating online, you can see the logic behind the argument. Bitcoin had a sharp drop, then price began consolidating sideways. And if that consolidation breaks downward, the measured move from the pattern could point towards the low $50,000 region. Now, technically speaking, that is a completely reasonable chart interpretation, but there's a much bigger question sitting underneath that analysis. Even if Bitcoin dropped to $51,000, would that actually mean we're in a bear market? Because when you zoom out and look at the previous cycles, bear markets in crypto don't usually begin quietly. They begin with very clear narratives. And that's the part of the story I think we might actually be missing right now. Let us step back for a moment and look what previous bear markets actually looked like. Take the 2018 bear market. That cycle ended after the huge ICO bubble of 2017. Billions of dollars flowed into projects that barely had working products. Retail investors piled in, prices went parabolic, and eventually the entire structure collapsed. When that bubble burst, Bitcoin fell around 85% from its peak. That wasn't just a chart pattern. That was a full structural unwind of a speculative mania. Then look at the next bear market in 2022. That one had a completely different narrative. The collapse of the Terra ecosystem wiped out tens of billions of dollars in value. Then the failure of major lenders like Celsius and Voyager spread contagion through the market. And finally, the collapse of FTX shattered confidence in one of the largest exchanges in the world. And again, the bear market wasn't just about charts. It was about systematic failure inside the ecosystem. But when we look at the current market environment, the picture doesn't quite look the same. Yes, Bitcoin has pulled back from its all-time high. Yes, the market has cooled. Yes, there are technical patterns suggesting we could move lower in the short term. But the broader structural story looks very different. We haven't seen a major collapse inside the crypto ecosystem. We haven't seen a major exchange failure. We haven't seen stablecoins losing their pegs. And we haven't seen the kind of widespread liquidation events that usually define the start of a true bear market. Instead, what we've seen so far looks more like something else, a cooling off period after a strong rally. And that kind of pullback is actually very common during crypto cycles. If you go back to the 2017 bull market, Bitcoin had several corrections of 30 to 40% during the uptrend. At the same time, those corrections felt terrifying. People were convinced the bull market was over. But in reality, those pullbacks were simply resets inside a larger trend, and something similar could be happening right now. But this brings us to another piece of the puzzle that I think people are trying to figure out: the macro environment. Because crypto doesn't sit in isolation. It's connected to global liquidity, financial markets, geopolitics, and economic policy. And right now, the world is going through a very uncertain period. We have rising geopolitical tensions, we have wars escalating in several regions, energy markets have been volatile, global trade routes have been disrupted. and central banks are still navigating inflation pressures. All of those things can influence financial markets. But here's the interesting thing. Despite those tensions, we haven't yet seen a full translation of that geopolitical risk into the crypto charts. Yes, the headlines are dramatic, but the market reaction has actually been relatively contained, which suggests that investors are still trying to figure out what the real impact might be. Sometimes geopolitical shocks move markets immediately. Other times, the impact takes longer to filter through. For example, when Russia invaded Ukraine in 2022, markets reacted almost instantly. Energy prices surged, risk assets dropped, and volatility spiked across global markets. Right now, the situation is more complicated. There are multiple geopolitical tensions building at the same time, but the market hasn't yet fully priced in how those risks might affect the global economy. So, what we're seeing in crypto might actually reflect the uncertainty. Investors aren't panicking, but they're also not rushing back into risk assets. Instead, the market is doing something that financial markets often do during uncertain periods. It's consolidating. Price moves sideways, momentum slows, and traders wait for the next major signal. That's why when you look at the Bitcoin chart right now, the most accurate description might simply be indecision. Yes, there are short-term bearish patterns. Yes, the market could still move lower. But the larger narrative that usually accompanies a full bear market doesn't seem to be fully present yet. And that's an important distinction. Because markets don't just move based on charts. They move based on stories, narratives, expectations, and shifts in confidence. When the narrative changes, markets can move very quickly. But right now, the narrative seems to still be forming. Some analysts believe the current pullback is the beginning of a larger downturn. Others believe it's simply a mid-cycle reset before the next leg higher. And the truth is, we probably won't know which interpretation is correct until the market resolves the current consolidation. That's why periods like this often feel confusing. Nothing dramatic is happening, but something is slowly building under the surface. And historically, those periods of uncertainty often happen right before the next major move. Now, before we wrap this up, I want to mention something for anyone who feels like they're navigating this market alone. Because a lot of retail traders feel exactly like that. They're trying to interpret charts, follow macro events, and understand the broader financial system without really having anyone to discuss it with. That's actually one of the reasons we created the Crypto Wolfpack. It's a community where normal people can connect, share experiences, read charts together, discuss macro events and wider news, access trading signals, and join daily live streams. And if you want to know the exact strategy we use in the Crypto Wolfpack to make money in both the bull market and the bear market, we've made a completely free course for you. The link is in the description below. And of course, if you're holding crypto long term, security is incredibly important. Personally, I'm a big fan of Tangent wallets because they make cold storage extremely simple. If you want to check them out, I'll leave the link in the description, and you can use the code Paula at checkout for an additional 10% off. So let's bring all this together. Yes, there are analysts suggesting Bitcoin could move lower based on short-term chart patterns. Yes, the market could still experience more downside in the near term. But when we step back and look at the bigger picture, the full narrative that usually defines a bear market may not be fully visible yet. What we might be seeing instead is something much more common in financial markets: a pause, a reset, a period where investors step back and reassess the landscape before deciding where the next move should be. And until that larger narrative becomes clearer, the market may simply continue doing what it's been doing right now, moving sideways, building pressure, and waiting for the next catalyst that finally decides which direction the cycle moves next. If you found this helpful, make sure you hit the like button, subscribe to the channel. Thank you so much for watching, and I'll see you in the next one.